Right, thank you guys so much for tuning in to today's live stream. Today is March 6th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here. So for Thursday, for today, we have unemployment claims, and it actually decreased. So from last unemployment claims, we had 242,000 people claiming that they were unemployed or currently seeking one, and the number has actually dropped by about 20,000 people. I don't know if it's, yeah, I would. This is good. Let's see. So yellow is forecasted. So the actual one is. So yeah, we've been going down, I would say. At not too bad. So this is good. But yeah, just know that this red folder news here, unemployment claims, does bring volatility into the markets. It gives the markets a injection of, I guess, it brings in that volatility. So we have that today, and tomorrow we do have NFP. So tomorrow is NFP Friday, unemployment rate, and and we have FOMC Powell speaks at 11:30 tomorrow as well. So tomorrow is quite eventful, but as of today, like I said, we have unemployment claims, and that's about it. Coming into the charts here for today, I was actually anticipating here coming into today. I was wanting to see prices take out previous day high. So let's take a look at this daily candle here, right? Let's take a look at this daily candle here for Wednesday. And with the way that we closed here, specifically on that candle, it suggests to me that we're most likely going to take out previous day high, right? So I had previous day marked as my draw of liquidity coming into today. But the one thing that I did want to draw one thing that I do want to know is that we have failed to have displacement, right? In this leg up here, right, on NQ, we do not have any fair value gaps to support the idea of higher prices, right? There's not strength in the markets. And we didn't really have a setup here on the intraday time frames, such as the 4-hour, the 6-hour, the 8-hour, or the 10-hour that supports the idea of higher prices, right? And coming into this morning, we actually are we're about to take out previous day low, which is something that I was not anticipating. But at times, as a trader, you should be able to pivot. And to be honest, I believe this bearish sentiment here is due to the tariffs that are being implemented. I don't know if bad is the right synonym, but our disagreements with Ukraine, and just I think that's just what's kind of causing prices to dip a little bit lower here. Stocks don't like tariffs, and with the new implementations of tariffs on China, Mexico, Canada, and they were heavily enforced here on Tuesday, or they actually were enforced on Tuesday, which I believe is just causing us to have this, bearish sentiment. But we've been selling off, to be honest, since last Monday. So And I kind of caught this move here lower here too. So I mean, with us moving lower here, it's reasonable. But yeah. So like I said, I want to see us. I mean, we're gonna have to pivot here. I can't say that I want to see us take out previous day high when the 4-hour candle charts, or whenever the 4-hour candle chart looks like this, right? It's not aligned with the daily time frame. We're about to create a 4-hour fair value gap here, and this 4-hour fair value gap isn't necessarily supporting the idea of higher prices, or yeah, higher prices, right? It actually suggests the idea of the opposite, lower prices. So right now, I'm just going to sit on my hands. I really don't want to force anything here coming into this morning. I'm going to wait until we close here on the 4-hour candle and the 8-hour candle before I really, not force, but I guess pick a side here. But as of right now, I'm just going to sit on my hands, let prices do its thing, and whenever we open up at 10 a.m. Eastern time, then I'll, consider if I want to be bullish, bearish, or whatever, But right now, I have to pivot. Like I said, daily candle suggesting higher prices. However, 4-hour candle and the intraday candles are not suggesting that right now. So, yeah, we're just going to have to pivot to, I guess, stall the 20 minutes. I do want to go over a trade here that I took last week with you guys, just so that I can explain to you guys and help you guys have a better understanding of how I view prices. So there was a pretty clean setup last week, right? And it was actually me catching that continuation lower here. So this is the daily candle here for last week, or not actually, previous 2 weeks, right? This is the Friday's candle. And the way that we closed here on this candle suggests to me that we're most likely going to take out the daily low. And with that in mind, I'm already anticipating that the next daily candle here, just based off of this daily candle, that we're going to take out the previous day low. And not only are we going to take out previous day low, but the previous day low is the exact same low actually as previous week's low. So this could be considered as a weekly model, but because of the idea called scope, we're scoping into the daily time frame here. So like I said, I have a bearish sentiment, right? I want to see lower prices, because like I said, the way that we close here on this daily candle suggests to me that the bare minimum that we should do is to take out the weekly low / daily low. And there is this concept that ICT introduced, right? It's called dealing ranges, and how there are dealing ranges on every single time frame. A dealing range is created with a swing low. So this is a swing low right here, and there's a swing high. So if you use the this box right here, this indicator, this markup, and you get the halfway point of this dealing range from swing low to swing high, you can visually see the discount and premium. And what separates discount and premium is this 0.5 level, right? This equilibrium level right here. And if you were to view this, I've been saying this a lot throughout my live streams, but I think it's good to reiterate it and to actually, just constantly remind myself of these concepts, right? But if you were to view this in a regular, customer to producer market, a producer or whoever is selling is always going to want to sell their prices at a higher effective price, right? As a seller, you want to sell your prices high. And if you're a buyer, you want to buy prices where it's cheap. Like whenever you enter a grocery store, you see a discounted item, maybe for a bag of chips or your favorite socks, right? Whatever. If it's at a cheaper price than normal, you're more inclined to buy it. Yeah.
Con có cái tiền mặt của con có hai tờ hai mỗi một tờ 100 cho mẹ break được không? Mẹ mai chốc mẹ về mẹ đưa lại.
Break. Oh.
Mẹ muốn lấy cái tờ trắng mẹ có tờ vậy chú mình để nhiều tiền như vậy. Không mất tiền này đâu.
Con đâu có để nó trong bank đâu.
Muốn deposit vào bank không?
Con có tiền trong bank rồi, con chỉ thích nếu mà con có chút scroll actually nếu mà
mày để như vậy lỡ ai vô nhà người ta thấy người ta lấy đi luôn, cất kỹ vô chứ ai mà để
ai vô trong phòng con?
Số nhiều đứa nó đi vô ấy, nhiều khi bạn của ba rồi con Kim không ăn video nó chẳng.
Alexa turn off my bedroom light.
Cất cho trong hộp đi con. Mẹ mượn 200 tại mẹ có tờ 10 rồi. Mẹ trả lương cho người ta mà đưa tờ 1 đồng nó tờ 10 đồng như vậy nó kỳ quá. Nha.
Yeah. Sorry about that. I kind of lost track of where I'm at right now. Give me 1 second. Oops, webcam just broke. Well, I guess, to get back on track here. So where was I at? Discount and premium. So like I said, as a seller, you're always going to want to sell in premium. You always want to sell when prices are high and demand is still, if you can sell your prices high and people are still willing to buy it, then why not do that, right? And vice versa, for a buyer, you're going to want to buy in discount. So with these two basic concepts here, right, you can apply this to the financial markets. In this chart right now, at this very moment, right, prices is already suggesting to me that we're most likely going to take out the daily low / weekly low. I'm thinking now in my head, why else should prices continue lower? What's another reason why prices wants to continue lower? Is there, are we seeking liquidity, or are we retracing back into a discount level or a premium level? And in this case, I gave you guys some hints here with that green box and this grid. We're actually retracing back into discount, and notice how from this swing low to this swing high, we haven't yet retraced back into the discount. Yeah.
Mẹ trả lại.
Không dùng hả?
Không dùng, tao má nhìn thấy ở kia má lại có tiền nữa.
Ồ.
Để ở kia.
So yeah, like I said, there's two reasons why I want to see high or lower prices. The first one being daily low, weekly low. I'm anticipating that next daily candle to take out those two objectives. Why should we continue lower after taking out the daily low? Well, it's to retrace back into discount, right? If there are buyers in the markets right now, the buyers are going to want to be purchasing here within this green box, and we're still technically, I'm not even technically, we are in premium, with above the equilibrium line. Like I said, this is premium, right? So it makes sense for us to be selling here, and it's reasonable to sell here because we haven't allowed the buyers to buy in discount yet. So selling here to get to the equilibrium level makes sense. I know it doesn't look like there's a significant move, but keep in mind this is the daily chart. So 40 points on the 15-minute time frame, that's a lot of points. And if you can leverage contracts, man, you can do a lot with that. So just keep in mind, higher time frame objective is for us to retrace back into discount, right? Our model, how are we going to align ourselves with the higher time frame objective? Well, it is based off of the weekly / daily candle. So going from the weekly / daily to the 4-hour time frame, I spotted a fair value gap that we could use to continue lower, right? So in this leg lower here, and within this daily candle, we created a 4-hour fair value gap. And this 4-hour fair value gap suggests and supports the idea of lower prices. It's not guaranteed that we're going to respect this fair value gap, but I know if we're going to respect the daily candle, for bearish price action, right, we should respect this fair value gap. It's not always guaranteed, which is why you have a stop loss, and this is why you should be able to manage your trades, right? And so whenever prices trades up into this inefficiency here, I take my entry. And one thing that I do want to note here as well is that because I'm anticipating that this next daily candle here and next weekly candle here is going to take out the weekly / daily low, we should, or it's best to be selling above the open, right? If you're anticipating, and this is me, by the way, if I am anticipating the next candle to be a down close candle, if I'm anticipating the next candle to be down close, right, that means it's going to take it's going to look like something like this, right? And I want to see prices create this candle. I want to see prices create a down close candle because of the way that we closed here on the daily candle and the weekly candle. So if I know that, my best sells are going to be above the open. So if we open up here, right? If we open up here on this next candle, we should trade up higher. And this is where I want to sell. I want to sell above the open. And I want to take this model right here, right? This is the model that I am consistently taking, where I'm selling within this range, right? I want to sell above the open. And that's essentially what I did here. Is whenever we trade up into that 4-hour inefficiency, I'm selling above this weekly open here. I want to see prices respect it, and I'm anticipating for us to take out the daily low and the weekly low and retrace back into the discount of that dealing range. And here I'm zooming in just a little bit more just so you guys can see it. So this is the hourly candle or hourly time frame. Here, notice how the entry pattern, like I stated, is the 4-hour fair value gap. We're not buying. We're selling above the weekly open, targeting daily low, weekly low, and the discount of that dealing range, indicated by that green box right here. What do? We trade up into the inefficiency, we take out the weekly low, and we continue to displace lower. And this is where we're at. So this is where that trade occurred, right? This right here. And I know I didn't do this, but if I were to continue to hold, right, how many points would this have been? 1,700 points, right? That's a decent amount of points, but that's not within my model. This is just to draw in viewers. But realistically, this would have been the model here. And 166 points, it's on the daily, like, it's a lot of range. If you guys were looking at this right here and you guys saw like, oh, there's not a lot of points, right? There's barely any points within this small range. Like I said, this is the daily candle. This is the daily chart. daily charts has a lot of movement, and like it's kind of hiding how much points there is, but 166 points is a lot of points that I was able to capture, right? And one thing that I didn't really go over here too, or go over with you guys just yet, is that there was a lack of SMT. So a swing high and a swing low will always be accompanied with SMT, right? SMT is essentially a indicator, not like moving averages or the VWAP or whatever, but it's a price action indicator where let's see if I can find an SMT here with you guys. Man. Well, SMT occurs on every single time frame. It's just a little bit difficult. Let's see. So there's SMT here. So like something like this, right? There's SMT here. So ES went above the swing high, whereas NQ did not. So there's a price action indicator. It's a price action indicator, right? And it essentially marks where there has been a manipulation. It helps the trader visually see where there has been manipulation, and a strong high and a strong low will always be accompanied with SMT, right? SMT is always going to be present whenever there is a swing high and a strong swing high and a strong swing low. So that's something I do want to draw your attention to whenever I did take this trade, because of the lack of SMT, right? Because there wasn't any SMT here in this specific trade at this moment here of this screenshot. Because there was no SMT, I anticipated that specific swing low isn't a strong swing low, and that we should continue to follow the trend, or I guess follow the order flow. And that basically wraps it up for the trade here from last week. Hopefully you guys were able to, have a better understanding of how I view prices. But to get back to the charts here, because we are about to close here on the 4-hour candle in about 3 minutes. So with the way that we're closing here, or it appears to be, I am anticipating that this 4-hour candle, we're most likely going to take out this 4-hour candle's low before retracing back into the 4-hour candle's high. Right? I want to see us take out the low first and then maybe end up rebalancing the inefficiency. But as of right now, I want to see us take out the daily or the 4-hour low and have this fair value gap here be treated as a breakaway gap. What do I mean by that? I don't want to see prices open up here and trade up into here. I want to see prices possibly take out the 4-hour low, or we can consolidate, and we could just consolidate like this and then have some candle that retraces up into here. But if we close below this specific candle's low here, if we close below this green line, I want to see prices, like I said, take out the low. But if we close above this green line, if this gray line ends up being above the green line, then I will treat this fair value gap as a gap that could be rebalanced. But as of right now, I'll treat this inefficiency here on the 4-hour time frame as a breakaway gap. So let's get into the 15-minute time frame here. So I just gave you guys the morning objective. I don't know if it's going to change within this next 1 minute, but like I said, because of the way that we're closing here on this 4-hour candle and the 8-hour candle, I'm going to anticipate lower prices. Treat this 4-hour fair value gap as a breakaway gap. I want to see us take out the 8-hour low, and yeah, so 4-hour low, 8-hour low is my objective. 15-minute time frame. 15-minute candle isn't necessarily suggesting lower prices. Same thing here on the 30-minute time frame as well. So even though we're suggesting lower prices here on the 4-hour time frame, the 15-minute time frame isn't exactly in alignment with that, right? Same thing here on the 1-hour candle. Hourly candle, 30-minute candle, 15-minute candle isn't suggesting lower prices. So there's a misalignment here right now. So I like to just sit on the sidelines and wait until one of these time frames, the hourly, 30-minute, 15-minute, really aligns itself with the 4-hour and 8-hour bearish order flow. So here's the 10 o'clock open. And like I said, I want, like, because we closed below this green line, right? Because the green line here is below this green line, I'm going to treat this 4-hour fair value gap right here, this 4-hour fair value gap, as a breakaway gap. I don't want to see prices trade up into here because, like I said, the gray line is below the green line. But if the gray line were above the green line, then I'll treat this inefficiency as a gap that gets rebalanced. But as of right now, I don't want to see prices take out the 4-hour high, meaning I don't want to see prices retrace into this inefficiency for the next 4 hours. But if we do, then we're going to have to pivot. But as of right now, treating this inefficiency on the 4-hour time frame as a breakaway gap would be my morning objective, morning bias, waiting until the hourly candle, 30-minute candle, 15-minute candle aligns itself with the 4-hour/8-hour bearish order flow. That's my morning objective. That's my morning, that's what I'm going to call for this morning. And coming into this week, I do want to go over some pros and cons here with you guys from previous week, right? So previous week, I was able to maintain a consistent trade pattern, right? So every single trade that I took last week, there was consistency. I had a higher time frame objective. I had a model to align myself with that objective, and I had an entry pattern. All three of those components were present whenever I took every single trade that I took last week. Like I went over with you guys, right? Like this trade right here where we were retracing back into discount. I can list all three components here. Higher time frame objective is for us to retrace back into the discount of the dealing range, of the daily dealing range. How am I going to align myself with that objective? The daily model, the daily candle is suggesting lower prices. I want to see prices continue lower into the discount of the dealing range. So I have the objective or higher time frame objective. I have the model. I also have an entry pattern, the 4-hour fair value gap. So taking those consistent trades is only going to benefit me in the long term, right? That goes as a trader, as a human. You have to find consistency in whatever you're doing. If you go to the gym sporadically, your schedule is, on and off. You go to the gym a week straight. You miss it for another 2 weeks. And then it's just on and off. You're never going to see that progress if you're going to be so inconsistent. You have to be consistent with whatever that you're doing, right? And I'm just applying that to the charts, right? Taking those consistent models. I should be able to identify and explain to you guys what my higher time frame objective is, what my model, and what my entry pattern will be. Second, time frame alignment. Time frame alignment is a crucial part of my trading strategy. So you're probably wondering, like, okay, you're saying why it's so important. What is it? Well, time frame alignment is, view it like reading a book. You read a book from page 1, page 2, page 3, page 4, page 5, etc. You don't go from page 1 straight onto page 50, especially if you're reading a a graphic novel, a nonfiction book, right? It's not beneficial to you if you skip 49 pages, page 1 to straight to page 50. You're going to miss out on so much information that you're not going to know what the story's about. You may know what the main character is, but you don't know any of the side characters. You don't know what the plot has been. You don't know what he's going through. And that's essentially what time frame alignment is. Imagine you go from the weekly time frame straight onto the 1 minute time frame, right? Time is fractal, but it has to be correlated. So if I were to base my higher time frame objective on the weekly model or the weekly time frame, I would go from the weekly onto the daily. What's after the daily? Maybe the 4 hour, maybe the 6 hour, maybe the 8 hour, maybe the 10 hour time frame, right? You can go from the 4 hour higher time frame objective onto the hourly, onto the 50 minute. But you cannot go from the weekly straight onto the 1 minute, or the daily straight onto the 5 minutes, right? You have to take it one step at a time. View it like reading a book. Like I said, page 1, page 2, page 3, etc. Third, SMT. Like I explained to you guys in that trade that I took last week, right? The lack of SMT was a confluence that I used for a continuation, right? I wanted to see prices continue lower because of the lack of SMT. Fourth, selling above the open in bearish conditions and buying below the open in bullish conditions. So like I said, I explained this in my trade earlier. You want to anticipate what that next candle is going to be like. And a lot of your information will be based off of the model and your higher time frame objective. If you guys know what those two are, then you're going to have a better estimate. You can have a better assumption of what the next candle will be like if you know those two questions, what the higher time frame objective is and what is the model suggesting. Fifth, remaining patient. If the market conditions aren't reliable, or if the market conditions are just really choppy and your strategy doesn't really favor it, then don't force a trade. I know for sure whenever I first started this journey, right, I felt there was a need to force a model, force a setup to happen, right? And sometimes the model, like the strategy isn't even there, but you're like, because you're so you're forcing the idea, you almost like, I guess, manipulate yourself into viewing something that isn't even there, right? You're schizophrenic almost. And yeah, just find that patience, find that discipline to not have, well, I was going to say not have that urgency, but, or not, urge, but everybody's going to have the urge. It's just, if you have the patience and discipline to be able to fight against that urge, right? And, those are all of the things that I did well last week. Pat pat myself on the back there. Some of the things that I can continue to work on. Consistent actions and thoughts that are aligned with my goals and my values. There are times in the day where, you know, like I'm doing good. Everything that I'm supposed to be doing is, you know, everything I'm doing is on my journal. I am following my plan. And then I watch, you know, I watch a video, a Clash Royale video, or something that isn't exactly going to benefit me in the long term, right? Those are the habits that I currently working on, right? It's okay if I'm eating or whatever and I'm watching something that I enjoy watching. But if I'm working and I'm trying to learn, there should be no reason for me to indulge myself in, I guess, in those actions, right? I shouldn't be watching or, you know, playing any games. Not beneficial for you in the future, in the long term. But yeah, I think I'm doing a lot better. I know I'm doing a lot better here. And yeah, I can't just speak this and not do it. So I think for me, I'm just going to do it. And second thing, having that knowledge, right? There was this question that I asked myself, like, okay, what do I want to do, right? It's a simple question, yet it gets someone thinking. And I've always kind of gave a vague answer, but I believe I can give a really clear, like, I know what I want to do. And with knowing what I want to do, I know what type of knowledge or what knowledge that I need to obtain to be able to do what I want to do. And coming into this week, I'm going to do everything that I can to learn as much as I can. And not even just this week, but throughout my life. I'm going to continue to learn everything that I need to learn in order to find success in whatever endeavors that I might have. So some improvements here for next week. Consistent trades. Like I said, consistency. Higher time frame objective, a model, entry pattern should always be present, should be identifiable whenever I do take a trade. If someone were to ask me, like, hey, Taco, why'd you take this trade here? I can give them a breakdown, give them these 3 components, like, hey, dude, I took this trade because of this, this, and that. Very, very straight, or, you know, consistent and clear. Straightforward. Second, implementing and preaching the importance of time frame alignment. Like I said with you guys, read the charts as if you're reading a book. Page 1, page 2, page 3, etc. Third, be patient. Don't force trades. There's no need for you to do that. Allow the markets to come to you. And fourth, learn everything that you can, everything that that fascinates you. What do you want to do? Once you have that answer to that question, learn. Knowledge is something that cannot be taken away from you. I believe that the most successful people in the world, if they are stripped of their belongings, all their assets, right? But they're left with just their knowledge, I believe that they should be able to, if they were stripped of everything, right? They got tossed into a random place in the world. They should be able to rebuild that level of wealth, that level of status, right? And yeah, that's one thing that not anyone could take away from you, is knowledge. So learn. And yeah, going back to the charts, it looks like we might have to pivot again. We should have prices should have treated this inefficiency here as a breakaway gap, but it appears that we're going to rebalance this inefficiency actually. And if we do end up rebalancing this inefficiency, then I'm really going to have to pivot here. So it looks like we're most likely going to retrace back into this dealing range here. And within this dealing range, right, there's that discount premium level that I was speaking of. And right now, it looks like prices wants to retrace back into this inefficiency, or into this dealing range here. This dealing range is premium level. So if we can if we do end up creating a bullish 15-minute candle, I would actually want to see us trade back into the discount or the premium of that dealing range and take out the 15-minute swing high and retrace back into premium. But I think that's going to wrap it up for today's live stream. Thank you guys so much for watching, and until next time, be safe.